information for the business of Nsimbi Pamasando at 31st May 2024. So we've got this information here. We've got the additional information here, and we've got the appropriation of the costs here. So we'll do this question step by step. All right, so the first part is prepare the trial balance before additional information and calculate the capital. Okay, so this is the information we're going to use for the trial balance. Alright, as I said, always have this diagram here. Debit side, you have expenses, assets, and drawings or dividends. Credit side, you have liabilities, income, and capital. Alright, so these accounts, we're going to put them either on the debit side or the credit side of the trial balance. Alright, so we'll start with them one by one. So colleagues, with intangible assets, where do we put this on the trial balance? Madam Agnes, where does intangible assets go on the trial balance?
Debit.
Correct, debit side. All right. Any questions? Have you seen on this diagram here? Assets, debit side. Here we have plant at cost. Where does this one go? Madam Yande. Plant.
It also goes on the debit side.
Wonderful. Yes, this is what I like, colleagues, where we are answering. That's correct, Madam Yande. Debit side. Okay. Okay, plant accumulated depreciation at 1st January. Where will this one go?
On the credit side, because it's a contra asset.
Correct, madam. That's very correct. Yes, it's a contra asset. It means it reduces the value of the non-current asset, right? So accumulated depreciation, credit side. Okay, next, buildings at cost. Mr. Matthews, where does this one go? Buildings at cost, debit. Mr. Douglas?
Buildings and costs, it's going to be debited because these are expenses.
It's an asset, non-current asset. Okay, don't let this at cost. Don't let it misguide you. Okay, remember, according to the international accounting standards, assets are valued at their cost. Okay, so thank you for that, sir. Okay, buildings accumulated depreciation. Where is this one going? Let's see who hasn't answered. Mr. Sunday. Okay, Madam Agnes, where does this one go?
On the credit side.
Sorry, Mr. Mo, is this okay?
Credit side is correct. Sorry, sir, what did you say?
Mr. I'm saying, is it only you can see the screen?
Or try to log in and log out.
Okay.
Yes, try to log in and log out. So credit side, because it's a contra asset. For those who have joined, we're just doing this question here. All right, draw this diagram here if you don't have it. All right, on the debit side, expenses, you put expenses, assets, drawings, stroke dividends. That's on the debit side. Then on the credit side, liabilities, income, and capital. Okay, so each time that you're doing a trial balance question, you have this guideline. Okay, land at cost. Doctor, oh, debit side. That's correct. Yes, land non-current asset. That's what's going on there. Yes. Okay, bank balance.
Debit.
Yes, debit. Okay. 10% loan notes. This is Nkongole, okay? Whenever you hear at loan notes, just think Nkongole, okay, colleagues? So if it's Nkongole, where is it going? Debit or credit side? Maybe I'm putting the trial balance just nearby here. Yes, 10% loan notes. Where is it going to go? Since we know that it's in
the
credit side, yes, it's a liability. Okay, does it get extended for 2 minutes? can continue. Next one is loan interest paid. Yes, loan interest paid. Loan interest paid. Colleagues, this is not the time to be quiet. We are doing well, okay? We are doing well. Mr. Stern, where does this one go?
On the debit side.
Yes, because it's an expense, right? Okay, so debit. Revenue.
Credit.
Credit, yes. This is credit here. This is debit. Return inwards.
Debit.
Why? That's correct. That's correct. It's a debit entry, but I just want colleagues to understand why it's debited. Okay. Can anyone explain why it's debited? Return inwards. Maybe then the definition for those who still don't understand what it is. Yes.
Though I'm not sure, sir, can I try? Return inwards could be an instance where goods are returned to you. If I'm not mistaken.
Oh yes, good. You returned to you the business, yes, by the customer.
Yes.
So when the customer returns goods, what happens to your revenue? The revenue that remains from selling those goods. It goes down, right? When a customer comes and says, I want a refund, yes, when a customer says, I want a refund, and a lot of business owners don't like that, okay? Refunds, because they've already made the money, then you're giving them back the money. Yeah, so it means your revenue reduces, okay? So you debit return inwards. All right, wages and salaries. Oh, and I forgot to mention. So return inwards contra revenue. Okay, revenue on the credit side increases on the credit. So a reduction in revenue is debited also. So return inwards is a contra revenue account. Wages and salaries.
Debit.
Yes.
Debit.
It's an expense, yes. Insurance.
Debit.
Debit, yes. It's an expense. Okay, energy expenses, self-explanatory, right, colleagues? With debit, right? Expenses, debit. Inventory at 1st June 2023.
Debit.
That is correct. Current asset is a current asset. Assets on the debit side. Admin expenses.
Debit is an expense.
Yes. Allowance for receivables. This is a contra asset account. Allowance for receivables is deducted from the trade receivables amount. This is an amount that you expect not to receive from your trade receivables. Okay, remember, colleagues, every time you do business on credit, you're not going to get all that money. Okay, you have to be realistic with yourself, and according to the prudence concept of accounts, you're not going to get all that money. Some money you might lose out on it. So an allowance for receivables is an estimation of the money you might not get from your trade receivables. All right, so this allowance is deducted from our trade receivables, so contra asset, so you credit.
So what is this on allowance for receivables?
It's an estimate that you might not receive from the people who are owing you money. You estimate the amount you might not get from the people owing you money.
Oh.
Yes. Because you know when you're doing
I used to think that was doubtful debts. The ones where you leave room to.
Yes, it's allowance for receivables, provision for doubtful debts. Funny enough, this has got different names. So here, what did they call it? It's allowance for receivables, huh? You might see also provision for doubtful debts. Same thing. Okay. So it's good that you also mentioned that, so that should you see that in the exam, you shouldn't be confused. Yes. So Mr. Ronald, that's the correct, that same one you're talking about is the same one we're dealing with here. Okay, so
All right.
okay. Okay, purchases.
Debit.
Correct. Expense. Discount received. Discount received, credit, yes. Madam Yande, please be saying it because no. Discount received, no, it's not debit, it's credit. Maybe you can explain, Mr. Ronald.
Oh no, I was just going to say that discount received credit, then the ones that are allowed and the ones that are debit.
Yes. Now just, can anyone shed light for our other colleagues? That's correct, Mr. Ronald. Can someone shed light? Because remember, when you shed light for your other colleagues, it's a part of revision and is to solidify your understanding. Yes. Can anyone shed light what discount received is and what discount allowed is?
Can I explain?
Yes, madam.
Discount allowed is a discount that we give to our customers. Then discount received is the discount that we receive as a business.
Yes, from
So
our
the discount
suppliers.
that
Continue, madam.
what I wanted to say, I forgot it. I'm trying to remember.
But you are correct. Discount allowed is given to the customers. You as a business, you give your customer a discount. When you give a customer a discount, it means they're receiving less money. Okay, so that less money. So if your customer is supposed to give you 100 kwacha and you've told him no, I've given you a 20 kwacha discount, means that you're getting an 80 kwacha. That 20 kwacha, you have lost it out, so that's your discount allowed. So it's treated like an expense. Okay. Then the opposite applies to discount received. If you're supposed to pay your supplier 100 kwacha and they've told you have got a 20 kwacha discount, you have saved that 20 kwacha. That gain is treated like income, so it's credited. Yes. Trade payables.
Credit them.
Yes, liabilities. Trade receivables.
Debit.
Yes. Asset, current asset. Okay, other expenses. Debit, right?
Sorry, what did you pay on
You found it.
payables? What was the explanation of trade payables and trade receivables?
Payables, people who you owe money. Bankongole. Liability. Trade receivables. Oh, there is, when you say it receivable, it's the money that is owed to you. Then when you hear debtor, that's the person that is owing you. Okay. And then payable, that's the money that you're owing. Then creditor, it's the name of the person that you are owing. Okay. But either way, should it come debtor or trade receivables, still debit. Should it come creditor or trade payables, you're still crediting. But just remember that, okay, colleagues? Yes. In capital, we know it's at the credit side, right? So here, what we're supposed to do is first yes. So here, what we need to do is we need to first total our debit side. Okay. So let's get our calculator so that we make sure everything is correct. Okay. So debit side 50 plus 176 plus 592 plus 188 plus 30 plus 4. Okay, do not worry, I've put these 3 zeros here. Okay, plus 48 plus 144 plus 14 plus 64 plus 884. I hope I'm not moving too fast. Plus 884. Yes, sir.
how did you explain the allowance receivables?
Contra asset. It reduces the trade receivables amount, because that's the amount you're estimating that you might not get from the people that are owing you money. So it's contra asset, so we credited it. Okay, it's here, sir. Okay, contra asset, so where is it? Yes, sir. Yeah. Plus 256 plus 56. Let me know what values we are getting when you add all of these.
The same, sir.
Okay, 2704. Okay. Then so you know, even the credit side has to be 2074, and we need to calculate the capital balance. So first add this 88 plus 48 plus 40 plus 1510 plus 8 plus 76 plus 200. What do we get as this total? 1970. Here. So to get our capital balance, you're just going to say 2704 minus 1970. You get 734.